The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman on this 6th day of April. My pleasure to be here, and of course, fabulous hosts earlier on. And I hope that I'm able to keep up that standard. Whoops, let me get rid of this because we just got the sound coming on. That was a surprise. There it goes, and it's gone. Okay, so the Dow's up 60 at 17,663. It was down about the same earlier on. S&P is now up 10 at 2058. 2056. The comp index is up 35 at 4,879. The VIX was higher now, it's down at 1492, under 15 again, down 50 cents. That's going to be important. The comp index is also working well because the QQQ series trading at 109.73, holding the 9-period exponential moving average at 109.02. It's now at 109.72. The previous high, and this is going to be really important over the next couple of days, and I'll explain why in a moment. Let's just go to the high that was made at 110.43, and that was on the 4th. Let me just double check. Yep, on the 4th. It'll be really important how we come into that, coming into Friday. So here are a couple of things as well. You've got, at this particular point, you've got gold, FGC. Gold had held very nicely that uptrend, that red uptrend line I'm showing right here. On the left, you'll see my charts. On the left is my daily chart. This is the weekly chart. This is the 120-minute chart. Let's move it down because you must leave the monthly chart. It's really important. Looking at the single leg A up, when in fact you went all the way in the Chapman wave, you look for the lowest, most identifiable low bar and start your wave count. You want to go 4 peaks higher, and at that point, other things can happen. So what we've got here is in the gold contract, it made its low. Let's just go to that low at 1,047 back in the week of the 4th of December. Then it went peak A, peak B, peak C, and a peak D right to the left side. Let me show you right here. The left side high, just under it, that peak C minus that was made the week of the 23rd of January of 2015. Kind of a cup formation. It failed to break above that and it stalled at D, and it hit that inside Chapman wave, inside wedge, left side, right side price time match. And lo and behold, it's pulled back to the 9-period moving average. And that makes gold, the action right now, talking about the right now, meaning this week, very important because a close below 1207, I'm going to call it 1205 to give it a little room, would be negative in the sense that the stochastic would be pulling back quite a bit sharper, but the MACD is still holding well, the moving average, convergence, divergence. So my parameters are a close in the gold contract below 1105 suggests that it could go lower. It could even test the 9-period moving average of the monthly chart at 1176. Now we're going to come into a whole bunch of other things that are very important. If you look at crude oil ran up this morning. It was running up last night, but the market was kind of ignoring that. And now you can see the parallel movement. Oh, there it is. Yesterday, the SPY gap down, and crude oil was kind of in a sideways range, but the SPY was on its way down and closed at its low. Crude oil this morning, that's the red line, jumps up overnight into the opening at 9:30. This is only 9:30 to 4 o'clock time frames. I like it that way. This is just getting rid of some of the noise. And what happens is it gaps up. The S&P fails, and now it's playing catch up. And that's all it's doing right now. It's just playing catch up. I'll explain why I'm saying I think it's only catch up in a moment. And let's go on. So that's it. Now the TLT, we're trading at 131.16, down 1.03. A potential peak F top right here. So the Chapman wave can go to 6, even 7 higher peaks. But the most important thing is watch the stochastic. See the stochastic? This is the red and green lines right there. Turning down. MACD didn't rally all that well considering the other moves to the upside. And that says that bonds could be stuck in a trading band. A couple of things are going on. Yeah, I showed my subscribers to my opening call this morning, the weekly charts. But if you look at of the yields, look at this. This is the TNX. A lot of people look at the 10-year, make a big deal of the 10-year. I happen to think that it is a very important factor. I like to look at the 30-year because it has other implications. But the 10-year is more like the rudder. It's really moving in a certain way that says, looking at the yield, it made a high. The 10-year made a high back at 24.84 the week of the 12th of June of last year. And it's gone all the way from the 24, almost 25 area down to $15.67. That's the low of the week of the 12th of February. Now it's bounced and it's made an arch formation. This is going to be important. I'll try to come back to that in a moment with my weekly charts. I need to continue because I want to look. Here's the dollar. The dollar right now is up 10 cents at 94.73. It failed at that 9-period moving average. I've been talking about that all week. I mean, actually for 2 weeks now, I've been saying that's really key. The dollar very rarely, since it broke down, since it turned down from March, the first week of March, back at 98.58. Since it turned down, it hasn't been able to close above the 9 EMA more than for 2 sessions. 2 daily sessions. That's really pathetic. And so we're watching this really closely. Now, here's the other thing. Looking at what I'd say to subscribers today is that we want to buy the inverse of the IBB. Sorry, not the inverse, the 2 times IBB. Now, some people managed to get it at the level that I discussed. It hit the level that I mentioned, that it should go under exactly, and then just before the opening, it had 1 or 2 trades just a tad below. I don't know if everybody got it, but what I wanted was to trade the IBB for this leg C to the upside. And one of the reasons I wanted to do that is because the arch formation in the weekly is still forming. And fund managers, I've been saying for a while now, we are short from way at the top. I hope that we can keep that short before I raise. I really don't like to raise levels of stops. Invariably, your first level that you choose is the one that you should stick with, because if you change it, you're almost always going to get taken out of the worst one. So this is different. This is a very long-term trade, and I do have a target down to the 220 to the 208 area in the IBB, NASDAQ iShares Biotech ETF. And it's trading at 278 right now, up 9. That's pretty big. But fund managers are being forced to go into things that normally they wouldn't want to do when they've been beaten down, but beaten down so much, and then showing some relative strength says, hey, I've got a chance here to make some money. And if I get taken out after it moves up, that's fine. That's the way I'm thinking of it. It's just a sector that's moving against the trend. So I'm going to go right now to Ben in Tallahassee, see what he's asking about, number one. And number two is I want to go through some of these things in much greater detail. So, Ben, how are you?
Very good, Basil. Thank you. Looks like that's the break.
Now, you ask your question.
Yeah, real quick. So it looks like I see why you're playing the downside with all the ETFs bumping up against the 9 EMA on the daily. Right. And I just wanted to ask you again that for that VIX short trade, you still feel we should go buy the second one at that?
Yes. Let me get back to it and we'll talk.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and we're with Ben in Tallahassee. We're looking at the VIX index. The VIX is trading at 1498, down 44 cents. Now, there are a couple of things that are going on. So, to answer your question, I don't think we will get that second position.
Yeah, it'll be close, but you're right. We may not. Correct. Yeah.
So and not only that, if it actually gets to that position, my thinking is that we'll probably have an opportunity to decide whether to hold it or not, because it'll get there and give us then a little bit of a gain, and that little bit of a gain will give us at least a sense of whether we want to hold it or not. But let me just go through what I'm looking at, because all I can do is use the rationale of my methodology and stick with the methodology until something else happens. And let me show you how that would work. In the volatility index, there's been a very positive divergence between the recent lows going to new lows and the stochastic moving higher and the MACD higher. That's suggesting to me that there's some strength being built up in the volatility index. That's number one. Number two is you've got a price time match which is coming out very close to exactly what you would expect in the volatility index. We've got to wait until Friday because it's the weekly chart, but it's suggesting at this exact point, there is the opportunity, and I have to mention it's just the opportunity for the volatility index to finally start a move to the upside to take out the 9-period moving average by this Friday at 1654. So that's number one. Number two. Number three is the monthly chart is still very negative, and that tells me it kind of concurs with my analysis in all the different time frames that weekly charts have had a spectacular move, and that you cannot really get bearish on the weekly charts until they give back about a third of the gains, and then you'll see the technicals fail, etc. The only way you can see a pullback is for the shorter term, the 120-minute chart, and then the daily chart to impacting. They're the rudders. They're the ones that are going to steer the more intermediate term weekly charts. So now I've got that out the way. Let me just make two suggestions. So your question is it really worth to keep active that second position? What I do with with my opening call is once a day, except those rare occasions where I have an intraday update, and it's often after a Fed meeting. My contention has always been that invariably whatever I do, at that update, I could do at a better price the next day. So it's more just holding hands so that we can look at it together and say, okay, these are the things that are happening. Once in a while, we've had a couple of really good trades. We've actually put them on at the Fed after the Fed meeting, and they worked out very nicely. But most of the time, it's just what I like to call hand holding for me as well, because I need to reassess what we're looking at, and therefore I give an update. So I've given the one day call. I have to wait until 4 o'clock. I cannot change that. I don't even mention on the show that subscribers do this, do that. It's not fair to people who've gone off to work or not listening to the show. The call is the call. So I'm just going to say I'm sticking with the call. I don't at this particular point have any reason why I should change it. And if you've got a moment, you just tell me if you've got a moment. I just want to go through this chart right here. Well, I hope I pick up the right one.
Basil, if you could also include what if you do feel that the direction of the VIX would be up now for the baseline VIX, what your projection would be for this move.
Okay, so let me just do this just to show what I've been using as an example. This is the Dow chart. You can see it. This is the one that I showed. Last few days, I've been showing 2 Dow charts every single day in great detail, one in much greater detail, and it shows the 50 bars that you went from the low of August the 24th to November the 3rd at 17,977, and then turned down for an equal amount of time on the left side to the right side. And then on January the 20th, you started a move that took 50 bars, went to the same thing, peak F in the Chapman wave at 17,811 on the 1st of April. And so far, everything about it is matching. I don't want to get in the way of the chart. It is just, as someone in the den said, says, it's a thing of beauty. I don't know how these things work like that. I actually have a suspicion it's just part of the human nature cycle of going from pessimistic to optimistic. I've gone into that in greater detail in other ways. But in the meantime, that's what I'm thinking. And I do want to stay with that scenario at this particular time. I hope that kind of answers your question.
Yeah. And then projection?
Okay. And the projection is, it's just real simple. If the volatility index starts to move into the 16s, then and the Dow closes underneath 17,000. I had said 17,600. We went to 17,603. Now I'm lowering it. If the Dow closes under 17,550 area, somewhere in that area, all I can say is my thinking is that the VIX index will have its first big move to $18.25 to $18.60. If it gets to the 18s,
somewhere around that 200 EMA.
Exactly right. But it's really important that this Friday we see the VIX somewhere. And that's is it options expiration? Yes, I think it is. We want to see the VIX up above 1660 at the close, or above or higher.
Got it.
Okay. Hope that helps you. Thank you for calling, Ben. Always appreciated. Let's go to Steve in Myrtle Beach. Steve, how are you?
Hey, great, Basil, and I want to thank you personally for the BIB trade. I did get it at your price this morning, so kudos and thank you.
Well, thank you very much. You know, I was hoping that we had 2 positions that hit just within 1 penny, and one was on the long side and one was on the short side. So good. Now let's do this. You're looking at
Lexmark, LXK. I'm long some calls and interested in the pattern.
Lexmark, I didn't even know they were still in business. This is they made printers and stuff?
Yep, that's it.
Okay, good. Oh, well, good. Welcome back, Lexmark. I haven't looked at you for a very long time. So
they've put themselves up for sale, so it's a little interesting.
Oh, isn't that? Oh, okay. So if they put themselves up for sale, very often what that does is it gives a little bit of a floor to the price, but it really doesn't say that the larger trend of its direction won't continue. So did you say you had puts on this?
No, I own calls on it.
Oh, you own calls. I was just going to say, did I get that right? So I'm looking at this and I'm saying to myself, the 200 period, folks, we're looking at this left-hand chart. I just did the notation. It's gone to a peak D. had a sharp pullback. In the Chapman methodology, it's got this pattern that I call. I always think, am I doing my work a disservice when I give them these nicknames, because people think, is this guy serious? What is he calling a drop bucket pattern? Well, that's the way I think of it. It's a drop bucket pattern. It's a double top. It went slightly higher, closed a little higher than leg C, peak C at 33.68. It went to 33.96 and then pulled back sharply. So is your call for this Friday or next week, next month?
No, several months out. I'm just more's a long-term position.
Are you taking that position as a technical, or because it's got this fundamental outlier which says at some point it might get taken out?
More on the fundamental part of it. I've heard some theories that it might be worth 40 to 50, so that's why I figured calls were a good way to play that.
Okay, because it's got a fascinating chart pattern right now, an inverse head and shoulders potential in the weekly, which would be very bullish to go to 35. Can you hold on through the break?
Sure, will do.
Okay, good. We've got Stephen Myrtle Beach, long walk. I remember taking along Myrtle Beach there, long, straight peninsula. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back with Stephen Myrtle Beach, and we're looking at LXK. LXK is trading at 32.16, up 14 cents. It made that move that I usually say that if it drops 1/3 from the left side lip to the right side lip coming off the base, then there's a real good chance 1/3 to a half, there's a real good chance it's going to retest the lows. There's just one thing that's really giving it support, and that's the 9-period moving average of the weekly chart, which is at around about 31.55. That's number one. Number two is the stochastic is actually at 83% and flattening. I should probably have a whole class about this, the stochastic and the MACD, a repeat of something I did years ago. Let me just try to explain it this way, that as in my work, above 80% is good. In every book that you read, you'll see it says stochastic above 80% is overbought. That's the term. And if it's under 20%, it's oversold. I say wrong, wrong, wrong. If it's holding above 80%, that is the most beautiful thing you can see. Look at the way the Dow and the S&P have held all this time because they were above 80% in the stochastic and the daily chart. So what I'm going to suggest to you is I should technically put an up arrow in the weekly because the stochastic's at 83% and holding and the MACD is good. I need to wait the whole week. I might even wait a little bit longer. I can just tell you this from my eye. If there's a new recovery high above 33.96, that's the high of the 4th of April, at any point in the next 2 weeks without taking out, let's call it this low right here, the doji low of 31.60, let's call it 31. If it doesn't take out 31, it can go sideways, that's fine. But in fact, if it takes 31 out, then you've got to be anticipating that at some point it could come back to the 30 level. And since you've got a call position, it's really how you handle the call with the long-term aspect in mind, because you could see that call shrink 50%, and you could still make 300% on that call if it gets either taken over or if it breaks out above 35.96. Let's call it 36, the 200-period exponential moving average. So in this outlook that I've got, where the left side shoulder comes down in August to 27.22, then the low is at 24.11, the week of the 12th of February, and now it's come back. If in fact it stalls for about another week and a half within a range of, it doesn't even have to, it can go to 30s, and it can still go down to the, I wouldn't want to see 29.21. I would say it could still go down to maybe 30.71, but 31 really needs to hold somewhere around there and go that way for a week and a half. What you're looking for is that break to the upside. Now, you're also going to find out if this market is going to start moving down sharply, then you will find out what internal strength LXK has, because if Lexmark is able to hold any market onslaught to the downside and still hold the 31s as support, you're looking at a stock that has some kind of resiliency for whatever reason it is. And that's really important. So you want it, number one, to be diverse of the market. It's in its own little orbit now. It should move up when the market moves down. If the market moves down, it should only move down a fraction. It should hold nicely. It should show good relative strength. And the MACD is suggesting that it should hold the relative strength, but the stochastic says if it drops below 76%, in the stochastic, you've got to be a little bit careful because that could be a failure pattern. You want it holding over 80% in the weekly chart on every Friday for the next couple of weeks. So I think you're in a good position as more. This is more like a speculation, but a good speculation.
I hope so.
Well, I mean good in the sense that you've done your homework and you've looked at the chart and you feel comfortable that this is the position. And instead of putting up a lot of money, you've got call positions. It's an easier way to do it. So
Correct.
I'm with you. I think you've got to trade. Do me a favor. Just give me a call. If out of the blue this thing suddenly breaks under 30.90, give me a call and we'll have another assessment. It could just come back, retest the low of 29.21. There's not that much I think you're going to do since you've got the call positions already. I don't know if you want to lighten up. If you want to lighten up, then I would say a close below, right there. A close below 31.30 says, be a little careful if you've got enough to lighten up, because you can always put that back on as soon as it finds strength again. Hope that helps you, Steve.
It does, and your comment about the stochastics, I always found that the stronger stocks get stronger, and so I never really worried too much about that 80 business either.
So in the meantime, as it's holding right now, if the stochastic does flatten out in the weekly, that will be a sign of strength.
Right.
Good.
Outstanding. Thank you. Thank you so much.
Good luck, and let me know how it goes. Thank you very much for
Will do.
calling. Okay, folks, now let's do this. I want to do. I had some calls about emails about. I got one from Al again. Al says, "Tell me, please say you were along the SPY, the IWM, the QQQ, the IYT, and the IBB. Just partially, Al. I'm sorry, I can't say I was along everything. No, I'm actually short, and we're short some of those. And there's a good reason for it, and I explained my reason earlier on. And what can I say? That's just the way we have to do things. You have to be a technical analyst and stick with your techniques. Now, I wanted to point this out. The USO has made this very sharp move to the downside. It found support where there really wasn't very much support on the left side. I would have said that it's more like 8.90, and in fact, it stopped right dead on the 8.99 level. So a little bit higher than I would have thought was support. Not only that, it's gapped up today and it's stopped right at the 9-period moving average. So here's the question. A good question is, was that Bob? Yeah, Bob asks, what about HAL, Halliburton, I believe, and BHI, Baker Hughes, of course. I haven't looked at that, oh my goodness, for years. So Baker Hughes had a spectacular move intraday. It's up 2.16, up 5.4. Now, here's the question in the den. The question in the den was, Basil, any thoughts on oil and yen, please? Thank you. Yeah, and the den asks. So I'm going to say this. The rotation that we've just seen in the IBB and the fact that we're looking at fund managers not knowing what to do for a little while and now saying, wait a minute, beaten down, that's where I want to go. I think that we can now say that the next question was Halliburton, which I've done a little bit of work on. Yep, Halliburton made a peak F top under the 200-period exponential moving average, trading at 36.27, up $1.87. I think that this is the other area. So we've got the IBB and we've got the oil service sector, Halliburton being one, HAL. And I'm suggesting to you that this rotation, and then someone said it could go on for a few more days. No, I don't think it's a few more days. I think it's going to go into next week, and that will be the big test. So I'm with you. I think a good eye, Bob. And I think that we're looking at the sector rotation. I thought about this a little while ago. I really wanted the proof of the pullback finding support in the OIH, and that OIH didn't pull back nearly as much as some of the oil service stocks themselves. So I'll tell you what we're going to do. We've got a break coming up. A little later. I'll look a little more at the oil service stocks and the OIH, but we're going to go to Jerry in the back bay. Jerry, I'll be with you straight after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and we're going to go straight to Jerry in the Back Bay. Jerry, how are you?
All right. SZO. This is a strange one. I'm not sure if it's usable.
I've actually never, when I saw it written down, I couldn't believe it. I've never seen the name, and it has really, when I say light volume, you had 188 shares on the 31st.
I know that, yeah.
But I have to tell you something, just before we go any further, I do not have any problem if you're playing an index that is based on the core that is moving in a particular direction. In other words, if it's in the right direction, it's in play. It's different to a stock that can just...
It's a short oil one time, as opposed to a double or a triple.
Oh, this is the 1-to-1. It's like the DOG or the SH in the indices, the DOG for the Dow and the SH for the S&P. Okay, very good.
So I think oil is peaking again and is going to go to the low 30s.
So this is the one. This is the 1-to-1 crude oil short.
Right.
So this is the only way you can really play the short side unless you actually short the USO, right?
I know. I shorted the USO once. I made about 30%, but it's irritating being short something. You have to pay a
you have to. If it goes against you, you have to pay. There's a whole bunch of things going on. I love these. When they came out with the inverted indices, that to me was the biggest break that you could get. The SCO, which is 2 times, has made a trough, and then it's ran to a peak A, B, C, D, and it's now pulled back very sharply from that. So this is the ProShares Ultra Short Bloomberg. So you're looking at, let me go through the name again, SCO. I've got to keep looking at it. I'd never seen it before, SCO. Okay. So now tell me, do you have anything here, or you're just looking at it?
No, not yet. I'm thinking of doing it in the next 4 or 5 days because they had that meeting in Doha, and I think that's sort of meaningless. There's been a huge buildup by commodity traders almost back to the old highs. And I think that's going to unwind, and the oil is going to go back to maybe 32, something like that.
Yeah, it's basically been trading in a range, and that range is in the 30, right here. You've got the crude oil. I'll just show it for a moment. So crude oil has been in a range between the 42s and 32s. Actually, the last one went to 35, and now it's just bounced strongly. So this is what I'm looking at, and I just need to just glance across here, if you don't mind, just to see. Yeah. Okay. This is what I'm looking at here. I need to just ask you, would there be a difference for you to get a smaller position in the SCO, which is a much more viable product? Would it make a difference to you?
To what?
To get this SCO, the 200%, but rather get a smaller position?
Well, I don't like being double, so that the
Okay.
the SCO is a double.
Yes. Double
well,
short.
I can look at that for the same dynamics. Yeah.
Yeah. Why don't you do that? And the only reason why I'm a little suspicious of the ones that have very low volume, because they could disappear. They could just decide, you know what, this is not working out. We're just going to close it, shut it down or something. There could be an issue. I don't know if that's going to happen.
That's an interesting thought, because that could happen, yeah.
So, and you don't want to have to start transferring at a particular price where you're now thinking of actually getting out, and all of a sudden you're stuck in the position of having to make a whole new trade.
Well,
so I'm just saying it might be for...
my apartment's not big enough to put oil in. So
Well, you know what? Being the back bay, you could always, they're always open sites. They're always building something. You could just stash them there. No one will even notice it.
Right.
All right. So here we go. You see that new building at the back bay that's coming up, and at the back bay station.
Yeah, it's amazing. Yeah,
amazing. And then there's another one that I featured for subscribers this morning, I think it was. Yep, this morning. And a beautiful building, in fact. All right, here we go. The SCO, if you don't mind, could I go to USO? You know that it's all transferable. I just want to give you parameters, and this is easier to do. So on the USO, which is the long side of the United States Oil Fund, you're looking at the 9-period moving average coming in with quite strong resistance. The MACD in the weekly chart is good. The stochastic's only at 58%, and invariably what happens is if it can't get to the 80% level, it means that there's serious resistance. So I'm going to do two things. I'm going to say to you, the USO, if the USO can fill the gap a little bit, and 992 is the low from the 31st. I want to see what happens over the next 3-4 days. If oil's able to climb a little bit higher, the chart itself of crude oil that I've been looking at is suggesting very strongly that this is the move that has to really scream to the upside from 37.66 in crude right now. It needs to get by Friday, maximum Monday. It needs to be testing the 40 to the 40.50 area, because if it fails, and if at any point in the next 3 to 5 days you see it trading at 37 to 36.50, I would suggest to you that crude oil on a weekly basis is just producing that H pattern that goes to an M pattern, and then you have to have patience, wait for the 32 level to 31, then you can buy it and you can rally. It can rally to 37, maybe a little higher, make the H pattern, and then come back down. It has to break out, and it has to break out real soon. If it does, it's probably going to help the oil stocks. Let me see what Exxon's doing right now. Yeah, it's the same thing. Exxon at 83 really needs to get to the 85 level to show that it has the tenacity, it has really the power to move much higher. At this point, it's basically in a trading range. And I'm going to suggest to you that I think crude oil might just be in a trading range right now. So here's my thinking. It's the timing of getting into the, let's call it the SCO. After making a peak D and dropping this sharply, and that's the short side, you want to see the SCO, that is the actual name is the ProShares Ultra Short Bloomberg Crude ETN, I believe. And you want to see how it handles the candle with a low of 125.20 to 131.70. That's really the area that I'd be looking at. If it takes it out, you have to wait for the SCO to test the 200-period exponential moving average of 120.80. Let's call it 121.30 to 120.50. That's the area that's going to be absolutely imperative. If it takes that out, crude oil is going higher. I'm looking at the inverse, the mirror image of crude oil. That's the way I'm looking at it right now. And all I can say to you is that just on a purely visual level, the H pattern that we're looking at in the SCO suggests that it's really important that if it goes even into the 127.40s, it's probably going to test lower down, and that will be the move that the USO is needing to get to $9.90, maybe $10.10. So I'd hold off right now. I don't think there's a rush, and I'll tell you why. If crude oil is going to come back down again, you will have plenty of time, because the next move down would suggest that if it takes out $8.80, it's going all the way back towards the 820, 760 area. So there will be time to get in on the short side. Timing the reversal is going to be important. I'm going to do it again tomorrow. I'll look at it. But in the meantime, let's just say that...
Yeah, you follow oil every day. So I'll
do.
Thank you very much.
Okay.
And I said I think, there'll be some support until this meeting in mid-April with the OPEC people.
Right,
so,
and that's about a week and a half, 2 weeks to go. All right, well, look at it. Thanks for calling, Jerry.
Thanks.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. And so now the IYT is holding very nice. Question about the IYT and the XAL. IYT is holding okay, but it is pulling back. It's down 92 cents. This is the iShares Transportation Index at 138.38. Hey, this is very important. You see this Chapman Wave inside track resistance zone, this channel? Look at that. Repelled, repelled, repelled. So it has to hold the 9-period moving average. This is another warning that I have that says you've got to be a little bit careful here because in the context of the the transports, what we're looking at here is you want the transports to be leading, or you want some parallel motion. Transports are way off the all-time high of 167, 30 points. That's important. Now, one of the things about the weekly chart is that the stochastic is at 87%, but it's starting to turn down. Got to be careful there. And the XAL right now, the XAL has gone again. This is ABCD, a second buy mode. That's gone to a D. See, there are so many Ds, E's, and F's in my daily charts that there'll be a complete recycle if we break out to new recovery highs all around. But until then, chop, 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 I think up and down to the side with a slightly lower highs and lower lows until there's a sudden decline to the downside. That's what I'm thinking. So XAL, the transport, also way off the high of 108.16. It's at 90.36. There was one other question I wanted to get to. Yes. Within the context of what I'd said before, of the OIH, the oil service stocks could have a little bit of a move up here. And one of the reasons is in looking at the JPY, looking at the technicals, very often there's a blatant move in the actual, because that's the product, but the real effort is put into the oil service stocks. And I think that fund managers will be looking at those and saying, hey, they've been beaten down so much, excuse me, perhaps they can also rally, just like the IBB has. I'm talking about the IBB. My very long-term short from 393.10. First of all, USD, JPY, just a quick question in the den. It is holding the 9-period exponential moving average. Boy, this is such a critical period. It looks to me like it wants to go down either further. This is dollar Japanese yen currency. It doesn't look like it's ready to turn just yet. And real quickly, soy made a peak E-top, and it's pulling back, holding the 9-period moving average and the 200-period moving average. Corn made a peak D with a whopping pullback after that peak D, and now it's trying to bounce back to the 360 level. I think it was SB. I was also looking at sugar. Sugar made a peak D, and this is how important these Ds are in the Chapman wave methodology. So be real careful. Now, one other thing I wanted to do is, I was talking about the IBB. So this is a trade that I was really hoping to be in for a long, long time. We've been in since July. We got taken out today. I raised the stop. Remember, I said raising the stop dumb because your initial reaction, we could have got out in the 240s. I'd said to subscribers, if you ever want to get out, this is the time to get out, but we're going to try to hold because we want to see the next move down. So it turns out now we're long, and it's along a little bit more than the short side. So yeah, that's fine. I believe I'll be switching back again to the short side very soon. Meantime, the IBB is at 281, leg C up in the daily. I believe it should still go to a D, and that's going to be the clue as to when the next big drop in the market comes, if I'm correct that there will be another drop to come. So with that said, we're wrapping up, and stay tuned for your swimming lesson. Fabulous information there on options. Looking at the VIX index, it's at 1467. I wouldn't be surprised in this 1460 to 50 area, it starts to hold and it has another bounce. That's going to be my thinking. So watch this closely today, and have a great day. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,